Well, hello there, and welcome back. In this presentation, I'm going to break down exactly how I captured yesterday's move on the Nasdaq, dated August 3rd, 2026. We look at the technical setup and the execution process step by step to see exactly what drove this opportunity. Without wasting much time, let's dive into it. This is a visual representation of the trade. You can see this is where I took my entry and rolled it up to the Asian highs, where I took part of the position out, then I rolled it into this marked area, which is an imbalance, which I took my final position. Then we can see price capitulating. So moving on to the daily chart. First, we're going to look at this daily chart with no paintings. It is important to see this naked chart because as a trader, it helps you understand the overall structure devoid of your bias, because sometimes when you carry your bias and your chart is all messed up, there's a lot of details that you may miss. So looking at this structure, we can see that over the past couple of days or weeks, or maybe even months, we've been seeing that the Nasdaq has been in a downtrend. This has been happening over the summer. So if you look at how we anticipate to see delivery of price during seasons, this is typical. It's a typical market profile where we expect to see some form of capitulation during the summer months, as we anticipate probably for a continuation, because we're coming from a very bullish season, which is I think from March we have seen a very strong uptrend. So this is a form of a capitulation, or to give it the best word, we can call it a reaccumulation. So we're in a very interesting area, as we're almost seeing that price is making intention that it wants to form a higher high, targeting this high, for us to see an overall change in structure and probably a signal that price is now in an overall has shifted structure to the buy side. So let's add some lipstick to the chart so we can understand it more. Now this is the same daily chart, but with the paintings and the lipstick. First and foremost is to note the all-time highs. Then we have the previous monthly high, which is the July high, which it didn't go above the June high and has been trending downwards for the month of for both the month of June and the month of July. So what we see, we have relative equal highs right here. We also have this big imbalance, which is both a fair value gap overlapping with a new day opening gap. But the area that I want you to focus on, one is this low, this fair value gap, and this fair value gap right here. So price breaks lower towards the 27,000s and interacts with this daily fair value gap from May, which hadn't been mitigated. Once that happens, we see this angry candle. It's an angry engulfing, bullish engulfing candle. When we see this after a swing low has been swept, this bullish engulfing It signals a lot of market structure change, where we anticipate to now be moving to the opposite side of where the market has come from. So in this case, what we're focusing on is the all-time highs and the previous monthly highs. Yes, and all these small internal highs which has been formed inside this overall range. Also, it's important to note that during the interaction with this daily fair value gap and this swing low, we see that there's an SMT formation with the SMP right there. That SMT formation is very important because if that SMT stands, it's going to support price to come and sweep these relative equal highs right here, and overall just going above all-time highs. So it's important for us to keep note of that SMT, though it's a very big SMT because the S&P really struggled to go lower, and currently I think it's almost hitting its all-time highs. The next thing you need to note is this order block, this daily order block. Once the engulfing was successful, we see this candle, which is a doji, interacting with this bullish order block. It interacts with it, and the next candle, what we're seeing is a gap. Normally this gap can be used as a breakaway gap, and if this holds, man, I think we're going to be seeing straight up higher prices till we sweep a significant high. Also note that during this day, because this is the daily candle that we were trading on Monday 3rd 2026, we're inside the new week opening gap, and you might miss it, but inside here between these two candles, the Friday and the Thursday one, we also have a new day opening gap. So it's more of an overlapping. And the moment I was watching how we're going to open the week, price interaction with the order block, it opened with a gap to the upside, and that confirms a lot of bullishness. So moving forward, I'm not looking to be smart. I'm not looking to fade the market or fade the overall move. What I'm looking for is to take advantage of the direction of the market so that I can be able to be on the right side of the market. Now we're gonna go inside the daily candle, and we're gonna look at at an intermediate higher time frame chart, which in this case, to my own preference, I'm gonna choose the 1 hour chart. The 1 hour chart this is the day in question. This is where we had traded to the upside. This is the day where I caught the move. So I was inside here to around here. But the main focus I want you to focus on, one, is the order blocks. First and foremost, we have this downward delivery. This downward delivery that happened, which was very aggressive, that happened on Friday. This downward delivery, the order block candles, I can take these two candles at the bottom as the order block, and I want to see how price reacts once it interacts with these order blocks. So the market opens, then you can see price interacts with those order blocks, and we can see a reaction to the upside. Also to note, there's a small new day opening gap right here, which is overlapping with the order blocks. That price interacts with it, and with the overall range and looking at the structure, we're now in deep discount. Price is priced in as at discount, and there are cases where you can sell at a discount and buy at a premium. But in this case, the structure was overall very clear and we're looking to buy at a discount. So price interacts with this arrays, which is a new day opening gap, which was very minute. Many people missed it. After that new day opening gap, it interacted with this order block. And also there's this internal uh internal low formed, which was formed on Friday before close of business. We see an SMT formation, meaning that the S&P 500 went below this low, but the Nasdaq couldn't find enough strength. So it means that in this move, the Nasdaq is going to be leading this move towards the buy side liquidity and all the liquidity pools and imbalances that are lying outside of the range. Also note we have a swing formation right here. This is also very important for you to note, this swing formation, because this swing formation is what validates this whole move right here. I'll make another video explaining why this swing formation right here validates a move higher. That will leave it for the next video. So let's move on forward. Focus on this last downward candle, which in this case is the internal order block to support the move going higher. Note the 10 a.m. candle, which is this candle which broke out of the range. This 10 a.m. candle, it interacted just nicely with the order block and proceeded to go higher. You can see once it interacted with the order block, there's a formation of an imbalance, which in this case, I'll term it as a short-term breakaway gap, and we can only expect price to retrace to the breakaway gap once it has already fulfilled its high time frame objectives. So it's important for you to understand this structure. I see many traders use the 4-hour structure, others the 15 minutes. It's a matter of preference. How do you understand the price fractally? How do you understand your levels? So there's no one size fits all. Make your choice and stick to it, and make sure that you execute accordingly moving forward. Now, this is the time frame where validates our execution. First and foremost, we see Asia highs. We see the Asia session was in a consolidation. This is your typical daily delivery when we're seeing favorable or the best, where we see the best setups forming. This Asia forming the consolidation of the market, it's where liquidity is engineered. So in the typical daily delivery frameworks, we want to see the Asia accumulate. We want to see London manipulate or initiate the manipulation phase. Then we want to see the New York session making the delivery for the distributions of the daily framework. So this is the best framework you'll meet as a trader. There are different and more complex frameworks, daily delivery frameworks, but this one is a typical daily delivery framework, and this is where you make most of your money as a trader. So let's look at this execution. First, we have the Asia, which is where we're focused on. 2, note that we are inside a new week opening gap, which also happens to be a new day opening gap. Price is going back into the new week opening gap. It fills it to the tick. It fills it to the tick and goes almost to use this wick as a rejection. Forms the SMT with a low. Then we begin to see a change in structure, a change in the state of delivery, where the market is almost in a rush to go somewhere. You don't want to be engaged in these conditions. You don't want to be trading in these conditions because then it's hectic, and the probabilities of you making money in these conditions are low. You want to expose yourself and make sure that you're sitting in the market at the right time. And in this case, from my analysis, I knew that the New York session would be the best session for me to trade. So note this small new day opening gap. You can see price interacts and fills it through the tick. Many traders didn't take note of that. Once that is filled, it goes below the 8 a.m. lows. Then after that, we're now in the distribution phase where we expect to see price rushing towards the liquidity targets and towards the imbalances that it seeks to mitigate. So in this case, what I'm looking at, one, I'm working with two philosophies. I'm working with one phrase in management where they call it fasting last out. FILO, 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 fasting last out. You want to be the first one inside the move, because if you are first, means that your risk exposure is minimal compared to the reward, which is famously known as risk reward. You have to have that calculation in your mind anytime that you're making a trade. You want to be the first one inside the trade. It doesn't matter whether you get it right or wrong. Most of the time you get it wrong, but if you get it right, it covers all the bad trade that you're taking. So I'm working with that. First in, last out. I want to be the first one inside the move, and I want to be the last one to get out of the move. The second philosophy that I'm working with is the logical liquidity target. You have to have a logical liquidity target where you intend to cover majority of your position. So in my case, yes, I was anticipating that we're going to see price move even higher. We're going to see higher prices, but I have to have a logical liquidity target where I'm going to cover most of my position and avoid issue of probably being slipped out or probably having made a lot of money then losing it from probably price retracing. So my logical liquidity target where I was covering a majority of my position was the Asia highs. You can see I entered there. I didn't take any partials because my logical liquidity target was well defined, and once it broke through it, I covered majority of my position. And I was looking for, because there was, as we've seen on the 1 hour chart, we had some imbalances at the top. If I could go back to the 1 hour chart, we had imbalances right here. You can see it. We had imbalances right there, which had not been mitigated. So apart from this liquidity target, which are equal highs and these equal highs, I'm looking for these imbalances to be mitigated, probably to be used as springboards for price to keep spooling higher. So these were my final targets, but my logical liquidity target was above the Asia highs and above the previous daily highs. Moving forward, we're going to look at now the price where I was filled. In this case, I used a market order, and my execution technique, I was using the rejection block. If you don't know about the rejection block, there are a lot of videos on YouTube, on other educational platforms. You can read about the rejection block, which is, it's one of those advanced concepts of how to make your executions fast. So I use it because it marries back to my philosophy of first in, last out. Yes, I know the risk of being stopped out is very high, but at the same time, it offers me good risk-reward ratio, which in overall allows me to stick in the game and make money, and yeah, continue playing the game. Also note, there's a famous pattern that's called the 3-drive pattern. When we are anticipating a smart money reversal in a market maker model, framework or schematic, for price to form the swing low, or for the smart money reversal swing, we see a drive pattern. It's like a drive pattern, and this drive pattern happens mostly above a swing high or below a swing low. But the biggest probability it happens inside a gap or a fair value gap, or probably not it happens inside a BC or a CB. So BC is a buy side imbalance, sell side inefficiency, or sell side imbalance, buy side inefficiency. So we see the first low formed, price goes back, then comes and rips through it, then forms another low. Note the times that these things have been formed. This was formed during London. This was formed pre-market, then moves higher. And note how it's not going above the highs of the previous swings, because it's a trend formation. It's a 3-drive trend formation where we anticipate an SMR. First one, second one, then last one, where we see the turtle soup, which is also a famous concept. Turtle soup inside the rejection block. You have to be very fast if you're using a rejection blocks, because it happens very fast. And once you execute, there's a high probability you're going to be stopped in most of the conditions, because probably you haven't pinpointed the structure correctly. But if you get it right, your risk-reward ratio will be good, and in overall, you make money in your trading business. So that's where I executed, and I'm going to use because I mark it out in real time, then I move to lower time frames to confirm the same structure before I execute. So I used it as a confirmation, then I moved to the lower time frames, which I'm going to show you, and then I executed it and bought it towards this A to B target. We can see once it entered this 1 hour imbalance, my target was the 50%. I was looking at the 50%, 0.5, the midpoint, the consequent encroachment of the 1 hour fair value gap. Where it tapped, that's when I took my position out entirely. But we see price continue to go higher to the 1 hour gap, which is above this one. And that's where we see capitulation. Price began capitulating. That's where I think we formed the high of the day. Now this is a 1 minute chart. This is where we see the structure nicely. Our focus should be around here. Note, we also have a 1 minute rejection block. Note, we have this fair value gap. This fair value gap, which is formed, which is tapped into right before we anticipate the formation of a swing low. This is also very important, because this is going to be a springboard for price to keep going higher. This is where you probably pyramid into your position. I had already taken a very large position. I didn't need to pyramid into the position. So my stop, I had already trailed my stop below this fair value gap to ensure that I'm protected, but I was expecting a springboard from this moving higher. Note, price goes inside the rejection block, then moves higher. What was my confirmation to execute on the open of this 1 minute candle, which opened then expanded higher very fast? One, I was looking at the 1 minute order block, which is also very important to note. This 1 minute order block, I wanted to see a closure. This candle right here, I don't know if you can see it, this final candle at the low, the next one, it didn't close above the order block. If you could see it clearly, it didn't close above the order block. The next candle formed closed above the order block. So you have to wait for the candles to close, because it's a structure that you're working with in real time. You don't want to jump the gun. Be patient, wait for price to confirm. Once price closed above the order block, my executions were in and my stops were just, I think, halfway of this rejection block, because I wasn't expecting it to come back, because now I was expecting price to spool, to move to my logical liquidity targets. You see price comes up, this, you can use it as an inversion, fair value gap. We can also use it as a balanced price range, which is also an advanced concept you can look at if you're interested. Balanced price ranges are also very important if you're anticipating to maybe pyramid, or you want to see price holding support as it moves to your target, or probably just tape reading it. You can use it. It's a very advanced concept. So you see balanced price range, taps into it, then price just moves higher and higher, rallies. That's where my first position was taken out. Then I held. This move continued just happening. There was no retracement during this day because price was reaching out for something. And also note that we're in a very bullish environment. So anticipating retracement is not really something that, in these conditions that you are expecting, you want to be very fast. You want to actually be the first one inside the move. Then you want to protect yourself inside the move and make sure that you get the best out of your move, which in this case is booking your majority of your positions on a logical liquidity target, and then moving forward and taking probably your pool profits at your max levels, or you could just use a trailing stop, which is also a very good method in trending markets. You can use a trailing stop. You can also use moving averages to trail your stop, to make sure that you make the best out of this position. I feel probably I should have let a single position to run, as you might, in these conditions, you might see all-time highs very soon. But today and tomorrow is still another trading day. It's all just how you trade, how your style is, understanding your process, and executing your process. So that's how I caught the move, and I hope you found this insightful and informative. If you like me to make more of these, comment down, maybe comment down your questions. I'll be doing these breakdowns from time to time, so we can look at different profiles, different delivery profiles, intraday delivery profiles, even the swing profiles for the higher time frames like the monthly and the weekly. So that's all from my side. Hope you found it insightful. I'll catch you on the next one. See you next time.